Oh yeah, hi. Glad to be here with you guys. I created this video to give you a short kind of crash course about the fees that you can expect to see when originating a home loan. So this is both applicable to a refinance and a purchase. All right. There are three main types of fees that you can expect to see, and we'll talk about them, get you prepared, and hopefully just empower you more so that when you're in the actual seat of learning about what your options are when it comes to financing, you're a little bit more equipped to ask the right questions. Okay. So three main types of fees. We have origination or lender fees. Okay. We've got our prepaids and our escrow, and then we have title. All right. So I like this one-page loan estimate. This is essentially what I use for my clients, my people. I love that it's color coded. I love that it's easy to read. I feel like it's very hard to get confused anywhere because it's just so clean. But let's take a look at these. So our origination fees, they're going to be what we're paying in points potentially. So I'm sure you've heard that term before. Points, that essentially refers to the dollar amount that you're using to buy your interest rate further down. In this case, we have a 97% loan to value. That's a 3% down payment. So we typically know that rate is going to be a little bit higher. If we come in with a down payment of 5% to 10%, that would help make our pricing a little bit better. But at any rate, this is just one of many scenarios. We've got a processing underwriting fee. These are real people. Okay, so there will be a processor who processes your loan. I myself have enjoyed processing my own loans, although I don't do that today. I am kind of a rare breed of loan officer where I originated, meaning I chased the business, brought it in, submitted a contract, but then I also would process it further. So that means I'm working with my clients to collect documentation, in communication with underwriting, figuring out if there's any problems that need to be solved. What are those problems? What documentation does that mean we need to ask from the borrower to get things moved along? Um, Underwriting and processing, again, very typical. I feel like the industry standard would be anywhere between $1,500 to $2,000 in those collective fees. If you're paying more than $2,000, $2,500 plus, I just think that that's maybe a question that needs to be asked. Like, why? What's the reason that our processing and underwriting fees are so high? Like, are they doing anything special? Do they have anything? Are they making the process easier for us? I would just have some questions because I feel like that's a little outside the industry standards. So, why is it so much? All right, moving on. We have prepaids and escrow. So essentially, this is what we're paying in prepaids. So I like this little note here. They're not fees. They are not paid to the lender. They are future bills collected up front so your mortgage stays current. A question that I get often is, hey, I'm paying 12 months up front for my homeowner's insurance, and then I'm paying another 3 months. Like, that's 15 months collectively. Like, why am I paying so much? Well, the answer is we're going to send a whole 12 months of payments to your homeowner's insurance company so that your first year is completely paid through, right? And then every year thereafter, what happens is the insurance company knows to send that bill to the mortgage company, your mortgage servicer, whoever's holding the loan at the time, and then that company will cut the check for a new for the renewal. All right. Now, what happens if we failed to collect enough money to cushion your escrow account is you can go negative. So, let's keep in mind that your payment is not a fixed payment. Although this is a 30-year fixed loan, the rate is what's fixed. The payment is not fixed, right? You can expect, and this goes for everybody, your homeowner's insurance and your property taxes over time typically will go up. So your payment will typically go up. If we don't collect enough of your prepaids and your property taxes or your homeowner's insurance goes up, what that can do is that can create a negative balance in your escrow account. And then that kind of gets messy when we're talking about how that account needs to be brought back to a zero, brought back whole. It can also not necessarily cause problems, but it can just be kind of a headache if you're trying to refinance. Now we've got some amounts that need to be figured out before the new one can go through on a refi. So yeah, it's just better, in my opinion, to just collect, more upfront than to leave you hanging or create a problem down the road that's not necessarily needed or could have been avoided completely. And then we have title fees. Okay, so your title is what you're paying to the title company, and typically the title company is the one making sure that there's no hidden liens on that house that you're buying. There's no hidden claims on the property that could rear its head and expose you later down the road. So those are very important components of buying a home. Okay, but these are essentially the three main components. So this is what you can expect. I'll make another video or a few more next time about how we can structure the loan specifically to accommodate those that, excuse me, either want a low cash to close number or a lower interest rate. I feel like most of my people are either going to be one of two mindsets. They'll be either rate conscious or cost conscious. So the first guy will say, hey, Al, I don't care what I have to pay. This is a 30-year loan that I will not touch. I will not refinance. I just want the lowest rate possible, and I'm going to pay this off as soon as I can. Okay, great. So we'll structure the loan that way. Another family might come in and say, hey, Al, we only have a total of $14,675 to buy this home. We have not a dollar more. But we also want the best deal possible. So how can we structure the loan to get the lowest payment while staying inside of our cash to close budget? Okay, so I like to say cash to close because this is the total funds that would be needed with your down payment and your closing costs. And in this scenario, we've got a seller credit of $5,000, which in this particular time isn't too far-fetched. I do see that quite often. I'll put a note in here. Date prepared is the 4th of February, 2026. So anyway, this was fun. I hope that I can, be of help, prepare you guys, if anything else, just empower you a little bit so that, you feel more equipped to ask the right questions. All right. Thank you.